From the floor of the CME Group, this is Danny Riley on this Wednesday, September 22nd. Okay, we're gonna hit it on all fours here today. Tim's gonna come in and do the technical side. Now I'm gonna go back to where this all started. And it had something to do with called a sediment indicator that our desk, I had looked at the day that I came out and said that this sell-off was over, and I thought that the market was going to go a lot higher. Since then it has, and it's gone up 100 handles. At the time, the bear sediment indicator that I was looking at, now the one that I'm looking at today is called Pragmatic Capitalism Blog. Okay, you can look that up yourself. We don't want to take any credit for anybody's work out here that we didn't do, okay? But back when the markets were on the lows, back at that 1037 level, bear sediment had gone 20% bulls, 80% bears. As of today, the sediment indicators have jumped enormously. In fact, they're back up at highs that they've not seen since the March 09 lows when the S&P rallied 50%. And this is a good thing with some respects. And what it goes on to say is that most of the retail smaller investors now are confident that the market's going to move higher. But out of the 8 times that it's happened, there's been 6 major sell-offs that have occurred after this type of thing has turned around like this. Now, I'm not going to read all of it, but you know, basically it's saying that the market could be getting near a top. Now, our opinion at the desk isn't that we're getting near a top. Now, Tim may come in a couple minutes and say that, yes, he believes we are, and he's got a good reason for it, and he stated it at the desk. He took some mathematical equations that he works with, it's how he devises his numbers, and he said that, hey, we think that he thinks this 1140 could be it for now. The pit bull came out through the IM on Friday and yesterday and said, look, if by 3 o'clock, the 3 o'clock cash close, the Tuesday after the Sept expiration, the market's coming down, it's a good indicator that maybe the markets are topping out a little bit here. Our call on the equity report yesterday and today was to sell rallies. Now, we're not exactly sure of where this is going to all lead to. The S&P just got down to the 1127 level and has bounced. Is that the right low? 1126.80, because you know Tim, he wants to make sure I'm getting the right levels. But here's the thing. As we go into the latter parts of the year and we go into the best 6 months of the stock market, which starts in November, I got this street feeling that says, you know what, we're going to have a shakeout, but then we're also going to get this thing that's going to come flying back up. The way it looks is that when you're looking at all these other markets, you can't go into the bond market right now. You're not going to get paid for it. What are you going to get? 2.5%? Maybe even lower on some of these deals. At least in the stock market or in the S&P, you've got a possibility of making some money and making some good returns on your money. And what we kind of think at the desk is that as the market continues up, a lot of these funds and a lot of these investment firms that are out there, they're going to need to put money to work. They're going to need to show that they had money working in the market when it started to go up. And the best time of the year for that is the last quarter of the year. Again, we're still thinking, and you know, that spooky thing I said about Halloween could be the time that we're looking at this, but right now the market's due on its own a little bit going down. I'll let Tim step in now.
I'm going to make this short and sweet. Yesterday I said if they decided to take this S&P up a little bit higher, we could see the 43.90 level with the possibility of 48.10. I kind of wish I saw 48.10, but 43.90 wasn't too bad since the high was 43.70 and 44 in a mini. But this is what happened after the smoke cleared and everything. Since we made those lows in August, in the NASDAQ and S&P, the S&P has seen a little over 100 point rally. What does the NASDAQ do? 252 handles, a 1749 low to a 201 even high. Well, how I think of things when these futures work together is a 5-to-2 ratio. Why? Because every handle the S&P moves is worth 250 bucks. Every handle that NASDAQ moves is worth 100. So if a rally of 100 handles in the S&P comes at hand, what's the 5-to-2 ratio? 250 handles in the NASDAQ. Bingo! I believe the highs are in. I should say Top Notch believes the highs are in. So with that in mind, Top Notch is thinking that we can see where that ascending right triangle broke out of. So we're looking anywhere today between 23 and 19, and there's one little detail that was left behind in that S&P Mini. On that move higher, there's a gap at 1105 even, and you better believe it, Top Notch believes they don't leave that gap behind. But let's see if we can get to this 19 level first. Have a good day. 5-to-2 ratio. What do you think? See you tomorrow.